Good morning, everybody, and this is your Dow Jones day trade setups for today. So a couple of things to be very wary of here, and you can see we do have diversions, high, prices high, oscillators high, oscillators low, and they've crossed over and they are pointing down. They are below the 80, so the possibility of this moving to the downside is fairly strong. The only thing that is bullish right now is the fact that we are in an uptrend as indicated by the moving averages. So we were flirting with this level, but I'm gonna just be a party pooper and just put some logic into this. At the moment there's a fairly strong level here, and there's one just below that as well, right over there. Okay, so we still have a zone of support to the downside, even if we have broken through this one, the 34.033, and we've sort of closed below that level. So that is the one area, but then we've got the zone of support to the downside. So the only thing that is going to get me into this market is a proper setup on one of these levels, and I'm going to be paying attention to the low of last week, because any close on the daily or the 8-hour below that level is going to change my tune dramatically. So if we just start drilling down through the time frames, looking at the 3-hour, have a look at the chaos that we've got here over the last couple of weeks, and we're coming back to test that chaos. We had this gap here which does concern me. This gap down, any gap down like that, I haven't seen what data caused it, but any gap down like that does really concern me. We've got what looks like a bit of a bullish setup, but it's not off a level. Well, I suppose we could argue it's off that structure there. Let's just put that in. So there is structure. Second test of that. A very weak signal. Not really keen on that one at all. And let's just have a look at the hour. So from the hour, we've got a crossover the moving averages. We're below the 155, but we have been above and below the moving averages for quite some time now. So the psychology here is pretty interesting, because we had the Feds come out with a bit of a dovish view, and we rally. Then all of a sudden it's like, is it true? Can't be true. And then people start selling off. And then you've got the perma bears, obviously, that are just wanting the market to crash. They're going to try to move the market down. So that's kind of the volatility that's created after this big move up. So the news was not, let's just say that it was news, but there wasn't noise to go with the news, or there wasn't data to go with the news. So that's kind of what we're seeing now. So we're all the way back into this area here. I have a feeling that with the hour being as it is, we have a possibility here for looking for a rejection, and the rejection I'm looking for is 34.144. If we do get that high, I would be expecting another move down. The other area is going to be this where we are now, but I don't like the way that we're closing above it. So let's just get down to the 15-minute. There might be some 15-minute micro levels that are right there. Yes, there is. So there is a tail there. So you can see that is a zone at the moment. So if we do reject this area today, and that's got to be during the European Open, then I would expect us to at least move down to 33.942. If we get through that, then your next target is 33.850. Get through that, then you're looking for the low of the week, or the low of last week, at 33.731. So my view at the moment is short. What I do want to point out here is on the 5-minute. So the strategy works on any time frame. So if you do have time to sit and watch a 5-minute chart, then you do have an opportunity as well. So have a look there. There's your level. Okay, it's also the close of the previous day. So put it in. And you could have done that on the 15-minute. You can see there is structure. It's not valid until this break here. But look at what's happening. You've broken through the moving averages. Now you're hovering along the 155. So the probability of this falling is there. But if you look at it on the 5-minute, you're going to see a cross over the moving averages, and now we're just trailing below the moving averages. So yeah, your entry wasn't here. Your entry was here with this hanging man. You could have gone in there with a stop above. I would have actually just gone to the previous swing because it's 57 points. There's your previous swings there. 57 points. And as long as it stays below the 155, it looks like the trend is down, and it just keeps drifting lower and lower and lower and lower and lower and lower. Then there were multiple. That was the first entry. Then you had this attempt here, which never really materialized there. But what it did do is it picked up on this structure here. You can see there, drop, reject, second attempt, and then even a third attempt at it as well, which would have been along there. And your stop would have been above here. And this area here, you can see you had one all the way back up there. And look at that juicy pin bar off this level. Great area to add to your trade, or if you've got outs, to add another trade. And that's a 53-point stop loss to where we are now, 200-point gain. So anyway, strategy works on all time frames. At the moment we are sideways, but I am very, very cautious right now. So I won't say I'm bearish just yet, but I'm extremely cautious. I don't like what I'm seeing. And the hour is leaning towards a continuation. You can see a series of lower lows and a series of lower highs. So it could really well be something that is brewing, looking to test these lows of the previous week, and then if we start getting through that, you're looking for a bigger move down. Now I just want to highlight on the on the weekly, see all these tails here? Look at all our noise that we've put on the charts, and you can see it is a really important zone. So this 4,000 area is critical. It is something that we need to pay attention to. Pay attention to these moving averages as well on the weekly. So it does look like a bit of a flag forming for a move down. You know, the Dow looks a little, sorry, the S&P 500 has a bit of a bigger bearish structure forming. This doesn't look that bearish, but I don't like what's happening here. That's a hanging man. So, you know, last week is a hanging man. So that's why I'm saying that break below the low of last week, that brings a bigger move into play. But that's on the weekly, so we need to we need to wait patiently for the end of the week for that bar to finish before we can start taking a more concrete stand on which way we're going. So anyway, for today, pay attention to these levels. I suspect for as long as we're below the moving averages on the 15-minute, we are moving down. So look for the rejections, and you're looking for shorts, and these are short scalps onto these levels. And I say short scalps because you want to be taking profit at every level. Wait for the pullback, it rejects a level, get in, take profit at the next level, and so you continue. And that's the safest way to do this. You're going to keep your risk low, and possibly want to keep your position size manageable as well, so that you don't, if it does go against you, don't lose too much. Anyway, that's kind of my view for today. I hope it helps, and we'll catch up with you tomorrow morning. Cheers for now.